Hello, today I'm coming to you to explain one of the last processes of your home loan, which is called the closing disclosure. Now, this is important for you to understand that it can be very, very confusing at this stage of your home loan. And so I figured what a better way to explain it than by illustration and through video. So first things first, the closing disclosure was enacted back in October 5th of 2015, and this was the government's way of making sure that you had ample time to review a closing disclosure before you went to closing. Previously, it was called a HUD-1 settlement statement, and when it went to you, it could have been 10 minutes before closing. Obviously adds a lot of stress at the very last second before closing. So therefore, as a way to help minimize that stress for you, one of the things that the government did was came out with this closing disclosure. Really, really important for you to understand, it is required to be sent to you 3 days before closing. So if there's any issues that are popping up at the last minute for whatever reason, it may be that one has not been sent to you because we're not quite ready. And so that would be something that we will have communicated with you about. But on this closing disclosure, this is the same document as you have seen previously, at least a minimum of 2 times under a new name. So you're going to see up here in the upper left-hand corner, it says closing disclosure. Previously, you've seen this document in its exact same format, but it was called a loan estimate. A loan estimate is just from the very beginning phases to the middle, near to the end of your home loan process. The closing disclosure means that your loan is now in closing. Now, that doesn't necessarily mean that your loan is clear to close, because here at Wallach & Volk, what we do is we do a lot of things in tandem or multitasking to try to make things a little bit quicker and faster and not be delayed just because underwriting is not quite done yet or one of your conditions is still outstanding. And so we talk about that in other videos. But the closing disclosure itself, when it first comes out to you, it's called the initial draft. The reason I'm pointing this out to you is because you're getting ready to get the initial draft through DocMagic, which is the system that we use to send it to you and to show that we did send it to you when we were supposed to and that you've acknowledged by clicking your little mouse saying that you got it. And so if for some reason you don't have email, then unfortunately you have to come into the office and sign it for us. So email is definitely the fastest and quickest way. The important thing for you to understand is how to read this document, and more importantly, to understand that it is a draft only. The title company also gets a copy of this when you do as well, and they have a lot of things to modify on the closing disclosure to make things even better for you. So one of the things, for example, that starts out on your initial draft that is not completely accurate yet is seller taxes. They're responsible to pay from January 1st of this year till present. So that being said, that is not yet deducted, which is going to come off the bottom line. So there's just a couple of things that you need to be aware of that are not yet adjusted on that initial disclosure. However, what's really important for you to understand is you're still going to acknowledge it. You're still going to click the button that says you got it. And then as soon as I have the final version of the closing disclosure with everything adjusted and accounted for properly with the title company, we'll send you another copy. So getting into it here, closing disclosure. This is the one that the federal government actually put out as a sample. So that's what I'm going to use to make sure that we don't have any sort of integrity issues with other people's data. So the closing information is going to be up here in the upper left-hand corner. Obviously, sales price, address of the property, whatnot, your information, the seller's information, and ours is in the middle. And then on the right-hand side is the loan information. So 30-year purchase fixed rate conventional loan in this case, or specifically on yours, obviously different loan type. And then as we make our way down, loan terms, loan amount, interest rate, monthly principal and interest payment, and then more importantly, can this increase after closing? So you always want to see no here. Unless you're in an adjustable rate mortgage, then it would say yes. Then we have prepayment penalty. Now, none of the loans that we do at Wallach & Volk have a prepayment penalty. So I always say you want to see a no here. However, of course, this is an illustration only, and so it's good for you to see that it does say yes in this case. So it would catch your attention if you saw that on yours, since we don't do those kinds of loans. And then balloon payment, no. Projected payments, this particular one is showing you that after year 7, your mortgage insurance will go away on this particular example, but it basically breaks down the payment of principal, interest, mortgage insurance, and taxes and insurance, which is your escrow account. And then, of course, your payment. And as we make our way down, it then tells you the estimated taxes and insurance, and is it an escrow or not? Okay, so it tells you what the amount is, which, by the way, is these two figures right here added up. So the mortgage insurance plus the taxes and insurance in the escrow account added together. Now, the other thing you'll notice is it says other homeowners association dues right here. Is it an escrow? No, that's because homeowners association dues are never included in your payment. We include them in our qualification only. Sorry, it always scrolls up really, really fast on this thing. So the very, very bottom, you're going to have the closing costs, which is very confusing because this does not subtract out yet anything paid for by the seller. And then you have cash to close. So this right here is the figure that when I send you your final closing disclosure, that will tell you exactly what to bring your cashier's check or wire transfer the funds to the title company. Now, you want to make sure that the title company accepts a cashier's check or accepts a wire. Some don't take cashier's checks. Under no circumstances are you to take cash or a personal check to closing with you. They will not accept it. Now, as we make our way to the second page, the closing cost detail, here is the closing cost detail. Here's everything from the appraisal that you've already paid, things like flood check to make sure you're not in a flood zone. We've got all of the title company charges down here. We've got things like the pest inspection, the survey fee. All of that stuff is broken out line by line. If the seller is paying any charges, it's going to be broken out on the far middle of the page column. Your column is over here. So if there's any seller paid closing costs, they will be broken out to the seller from your side to their side. You're also going to see any homeowners association dues, transfer fees, etc. And then of course the real estate agent commission and whatnot is on here as well. As we make our way down to the third page, you will see the original loan estimate figures, and then you will see the final figures. So what's really important about the closing disclosure and the loan estimates, all of them, is that we have a specific tolerance. So if I, for example, quote you that it's going to cost you $475 for an appraisal, and God forbid the appraisal comes at $1,000, there's only a 10% tolerance for that excess that can be charged to you. So on a $475 appraisal, that's only $47.50. Any excess would have to be covered by us, the lender. So you're going to see that summarized in the difference here. Of course, in this case, you don't see that. I tend to be very accurate on my figures for cash to close, so you shouldn't see a significant difference. The summary of the transaction, again, the document is basically just itemizing the sales price. Things that have already been pulled from pages 1 and 2 are listed out here. Your earnest money deposit is here. Any seller credits that are not broken out on the previous page are here. And then if there's any sort of credits from the lender or title company or realtor or anything like that would be broken out here. The other thing that can be broken out here is option money in the state of Texas. It would be broken out there as well. And then any taxes paid for by the seller from January 1st until present is listed here. And then of course the right side charge from the seller. So this bottom line right here where you see cash to close from $14,147, this figure right here matches page 1 at the bottom. And then as we make our way down to the fourth page, you will see things such as assumptions and demand features and late payment details. So on the late payments, just as a refresher from our conversation previously, your payment is due on the 1st. Please do not let it be to the 15th. Unfortunately, that's when you get charged a very stiff late charge. You have a little bit of time between the 1st and the 15th, but don't push it. I suggest setting up your payment on auto deduction so it makes it a lot easier for you. And it just always gets paid on time. It talks about negative amortization if there is such a thing on your loan, which I don't do any of those loans either. And then partial payments if they're accepted, and then what you're giving collateral in. So you can see there's a lot of information on here about escrow accounts and the future, how things work on the taxes and insurance. And then on the last page is page 5, which talks about the total of the payments over the life of your loan. So obviously being a 30-year term, your total of your payments is going to be quite a lot because you're stretching your monthly payments out over such a long period of time. So this is very similar to what the car dealers will provide to you in a slightly different format. It's usually a yellow or pink sheet that kind of shows you how much you're going to pay for that car over the term of your loan. So how much is the interest? How much did you finance? And the APR. So the APR is not the interest rate. It is the costs of the loan term expressed as an interest rate. But it's not the interest rate in which your monthly payments will be calculated. And then you can see this tip percentage. This is the total amount of interest that you pay over the term of your loan. Obviously, the more you're borrowing, the higher that is. The less money down you put, the higher that is. There's a bunch of different factors there. And then it just talks about a little bit of additional information as to who's who. in your transaction, which you know by now. So that is the explanation of a closing disclosure. Just want to remind you once again that the first one you get through DocMagic is a draft. It is not final figures. Please do not go get your cashier's check or wire transfer. Please do not panic because the numbers are not final yet. When I send it to you and send you a text to remind you to go into DocMagic to accept it, I will remind you that it is not final yet. So please don't rush off and get a check because it is not ready for that at that point. Once we have the final closing disclosure is when I will then ask you to please go to the bank and get the check or get your wire transfer. If you have any questions about your initial closing disclosure draft, please do not hesitate to ask. It can be very, very confusing at this part of the process, and I completely understand. So don't hesitate. That's what we're here for. Have a great one.